Welcome to the ETF Market Insights, your regular webinar series that focuses on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights with the goal of helping you become an informed investor. Make sure to visit www.youtube.com/ETF Market Insights to watch previous episodes, and remember to hit subscribe so you receive a notification when we post new content. Thank you for joining us today. Let's get started.
This is the ETF Market Insights weekly webinar. I'm Danielle Nezel with BMO Exchange Traded Funds. Thanks so much for joining us. So a warm welcome to all our live viewers who are tuning in on this Friday afternoon. And then thanks to everyone on YouTube and all our subscribers who are tuning in as well. It's really great to have you all. We got a lot of questions this week, so we'll set aside some time at the end to get through those as well. So thanks for your questions. So just as a reminder, before we get started, we're not giving out advice today. We are not giving out any recommendations. The sessions that we provide you with our ETF Market Insights webinar, they're all about just education and really empowering all the investors out there to give them the information, the critical information they need to navigate markets and manage their investments. And today's discussion in particular, we're talking about our 2022 ETF Outlook. So BMO ETFs released our ETF Outlook report this week. We press released it on Monday morning, and we have Mark Rays, Managing Director at BMO ETFs, joining us today. He is going to help us break down that entire report. There was some fabulous information and data in there, so you don't want to miss that. And a reminder to everyone, we have our YouTube channel. It is up and running. We would love it if you came to visit us there. Click subscribe. You'll get all our content on demand. We had a really great January of topics, and if you missed an episode, check out the YouTube channel and you can replay it when it works for you. So Mark, 2021 was a big year again for ETFs. This is kind of how the report starts. You look back on 2021 and you kind of give a look at where the flows went in ETFs. What can you tell us about where flows went in 2021?
Sure. Thanks, Danielle, and thanks everyone for listening in. We really appreciate it. So yeah, if we look back to last year, another record-breaking year for ETFs, not just here in Canada, but globally as well, but we'll focus on the Canadian market, with over 50 billion of new assets coming into the ETF market. You know, quite simply, really strong year in the markets, you know, that continued reopening trade, that reinflating trade, hitting equity markets and very strong positive returns. I think you saw a lot of investors really want to participate, and ETFs are a great way to do that. You know, ETFs really allow you to get instant access to whatever you're investing in, whether that's, you know, a broad market ETF like our ZCN Canadian Equity, or if it's, you know, something global like our ZGQ Global Quality ETF. You know, an ETF with a simple, easy to use one ticket solution gives you that exposure you're looking for. So, you know, that's really resonating with investors. And when we look at last year's markets and people wanting to put cash to work, and you know, perhaps you've been sitting at home looking at your own screen and monitoring markets more, and you were watching them go up. You know, getting into ETFs as opposed to individual stock picking, you know, you can make a trade based on the market or a sector or a theme, as opposed to having to pick individual securities. So that's been the big story. Equities definitely dominating the inflows, but as well, you know, and a big benefit to investors out there, the number of ETFs here in Canada just keeps climbing. So we're through 1,100 now. You know, I can remember back to when we were, you know, sub 100. So that's meaning that there's a lot of options out there for people to choose how they want to build their portfolios. And that rate of growth just isn't slowing down. You know, we've got 200 that came to market last year, and we'll talk about some of the areas that have really been growing in terms of new products. But it's not just, people investing in the tried and true, although you would say that some of those ETFs, like again our ZCN, continue to really lead the flow table. But you're seeing lots of new ETFs come out that are giving people different ways to build their portfolio. So it's a real win-win that way. Thanks,
Yeah, it's really great to see all those options for investors. They can really build a portfolio that's catered exactly to them and their needs and their investor profile. But over 1,000 tickers, it sure is a lot for investors to sort through. So we're glad everyone's here listening in and educating themselves. I think that's a really important step. Canadian ETF providers. So this has kind of been the same story. This didn't change much in 2021, but as a reminder, the assets in ETFs are really dominated by the big three. So BlackRock with their iShares, BMO ETFs, and Vanguard make up 70% of the ETF market, which is a big share. But of course, other providers getting their share as well, and more coming to market. Every month we see another provider coming out with ETFs. So Mark, the first topic that you and your team tackle in the report is responsible investing and using ETFs to really align investors' investments with their values and what's important and meaningful to them. What can you tell us about how this area of the market grew last year?
Sure. Well, Danielle, quite simply, this is one of the fastest growing areas in the whole ETF market. This is a trend that's been carrying over year, but we certainly saw in 2021 that it really accelerated. So what are we talking about here? The number of ESG or responsible investing ETFs doubling from 50 to over 100 now. So once again, that idea of having more choice that we just talked about certainly applies here. Happy to say that one of our BMO ETFs has led the way, our BMO MSCI USA ESG Leaders, ESGY, is actually the most successful Canadian ESG ETF. If I look at that, what are investors looking for? They're looking for broad market solutions where they don't sacrifice returns. And this type of ETF looks to have holdings that mimic the broad market, while of course not holding those securities that might be considered ESG laggards. And I think that's really important because people want to know that they can align their investments with their values, but at the same time, they don't want to sacrifice returns. So as these products build out track records and as people can look at index histories, you can really see that in actuality, you get a bit of a quality bias here. And so therefore you avoid some of the bumps in the road, and these ETFs are actually performing very well. If we look at it overall, ESG ETFs approaching 3% of the market, that's not a big number, but of course it's coming off a smaller number. So that's only going to continue to grow. When I think about how people are using them, some people are viewing them as replacement vehicles. Some people are using them as satellite or complementary vehicles. So I think that's still evolving, but more than anything, their use is going to grow no matter how you approach them. So that's going to be a big story going forward. And when I look at it, let's think about what we're talking about today. Environment is front and center. You talk about atmospheric rivers out west. Some of the incredible heat and cold that we've all experienced over the last year. The volatility and the dynamics in the climate right now are really catching everyone's attention. So it's a hot button issue right now. And on top of that, of course, social front and center, a number of things going on that we've talked about in the past, and governance really hasn't gone away, right? We all experienced the Rogers story in the news this year. So ESG is really topical for investors, very much front and center. More reporting coming out, more interest from regulators about how to best approach it. I think it's an area of the marketplace that's still being defined, but regardless is growing very quickly.
Yeah, it's a good place to end on. It's still being defined, and I'm going to highlight, or I like that you pointed out as investors are sorting through these 100 plus ESG ETFs out there, understanding the differences between a broad market approach where you're really getting the same sector makeup in every region versus a thematic approach that's very more focused on an E issue or a G issue or an S issue. So thanks for talking us through that. So another area where we're hearing a lot of press on, and then the narrative has really shifted here. So with innovation, growth stocks. So back in 2020, this was all the rage. The performance was extremely powerful. And then now we're seeing a big sharp pullback in innovation stocks and innovation ETFs. What can you tell us about the kind of outlook for these types of investments? Is it just a hot trend that's passed, or is this something that's a long-term growth story that will continue to play out?
Well, absolutely, it's a long-term mega trend. So you're looking to capture an investment theme that you think is going to really help drive markets, not today, not tomorrow, but we're talking over a decade, and it's something you want to put in your portfolio and hold in that growth sleeve of your portfolio, where there's going to be a couple of bumps along the way, but you're thinking long term and you're investing for the future. Now, if we look at what's been going on in the marketplace that's been impacting these types of names, quite simply, it's been driven by inflation and therefore volatile and rising interest rates. So the more that a company and its valuation is dependent on future cash flows, so the more growthier a company is, relative to a more mature cash flow upfront company, the more you're going to get impacted by what's going on in markets right now. So that's what we're seeing. That volatility in interest rates is really impacting these growth names because, of course, in a discounted cash flow model, that discount is hitting future cash flows more heavily than things up front. So that's why you're seeing higher volatility in ETFs like our ZINN, our innovation ETF. However, as we started with this question, you're really investing for the future. So you have to be willing to take a couple of bumps along the way, but you're thinking about these mega trends that are going to help drive market returns, not today, not tomorrow, but over the next decade.
And I think it's a good time even to point out why an ETF can be such a benefit to accessing these mega trends, because you're really minimizing that single stock risk. So actually minimizing the volatility, even though we are seeing a lot of volatility here, and then just maximizing that exposure to the long-term growth trend. Here's another, I don't think it's a trend. I think this one's here to stay as well, but crypto assets. And for the first time, investors are able to access Bitcoin and Ethereum using an ETF. But it's been a wild ride, hasn't it, Mark? What can you tell us about these ETFs that came to market last year?
Yeah, it's been an exciting ride. You look at something that's as high volatility as crypto assets, it's a challenge within your portfolio, but it's also an opportunity depending on, whether you're on that ride up or the ride down and when you entered. But I really view this as another area that really proves the value of ETFs. Certainly people could invest in cryptos before they came out in ETFs, but I would say that the ETFs have really helped bring it much more mainstream, right? The idea that you can trade it on the exchange, it's a single ticket, you trade it like a stock, you've got that bid ask, you understand what's going on, you're getting that transparency, all those benefits of ETFs really come through as an access vehicle for some of these things that are a little harder to get at or harder to trade. So within the Canadian market, first to come out with crypto, that's pretty exciting. Right back near the beginning of the year was the first, and now we've got over 30 tickers providing access to crypto one way or another. Already up to $5 billion in assets, so clearly investors were hungry for it. Have been investing quite a bit, it seems, into it. So to your point, looks like it's certainly here to stay. The challenge really is the volatility, right? So when you're coming in and out of this market, just understand how much the prices move and be comfortable around that, considering the weight in your portfolio, whatever is appropriate for you. But once again, I do think this is another great proof point for the value of ETFs by bringing crypto to the mainstream.
And I love this Bloomberg snap to really kind of show that volatility. So what you're looking at, and apologies if the lines are a bit light, but the red line at the bottom, and the gray line, they're tracking pretty much side by side. Those are some of the Bitcoin ETFs since the end of April when most of these got listed. The green line and the line below it are Ethereum ETFs. And then there's that light kind of blue green line that almost looks flat. That's an S&P 500 ETF. That's ZSP, which is looking next to these volatile crypto ETFs more like a government bond ETF than anything else. So a ton of volatility for sure in that asset class. Inflation, Mark, another hot topic, top of mind for investors last year, continuing into this year. What's your outlook for inflation, and how can investors use ETFs to mitigate the impact of inflation on portfolios?
Sure, inflation really is a hot topic right now. I mean, we've seen the prints coming into year end where we're seeing inflation levels that most of us haven't seen in our investing careers, right? We have to go back quite a few years, and of course we can talk about the 1970s, early 80s, but for most of us, we haven't seen periods of really excess inflation that we're contemplating right now that maybe we're at the front edge of. And so that's really going to be the question in 2022. How much of this inflation is transitory, how much of it is permanent? But certainly when you see, prints in the US, above 7%, that's sticker shock and grabbing everyone's attention. So what does that really mean for your portfolio? Certainly it's a challenge for fixed income because of course bond coupons are fixed, and therefore inflation really erodes away that future purchasing power of both the coupons and the maturity. So people are thinking about, maintaining or keeping that higher equity weight. That's certainly one of the main thoughts. But then within equities, as we talked about with the innovation companies, you're probably going to be a bit biased towards the more mature cash upfront companies. So for us, from a factor perspective, that certainly makes us think of the quality factor. So we're thinking about, those blue chip companies, lower debt loads, a little bit less interest rate sensitive. So that type of rotation into the quality factor, like our ZUQ, our US high quality ETF, really is gathering attention. Over on the fixed income side, you might think about some of the non-traditional things like preferred shares or ladder preferred share, ticker ZPR. That's actually been producing positive returns while fixed income has been challenged. And that's because of the rate reset on the preferred shares really tied to that rise in the 5-year Bank of Canada bond. So as rates are going up, there's actually a benefit there to the reset of the rate resets. So that's one area where you can think of within fixed income to help buffer against inflation a little bit. But certainly for 2022, this might be the #1 conversation that we're having around portfolios. So navigating around that asset allocation mix, but as well, within equities and within fixed income, thinking about how you buffer a little bit against inflation.
So now if we just pivot to factors and factor investing, what we also saw last year was that big reversal out of growth and into value. Something we haven't seen as well in a long time is value really starting to outperform growth. So what can you tell us about the outlook here for factor investors given this environment?
Yeah, I think it's an interesting time to think about value versus growth. Certainly value underperformed for a number of years. And then with the vaccine news and the reopening trade coming out, value suddenly, roared ahead and really outperformed over the first part of the year. That was a bit more muted in the back half of the year. So I think people are reevaluating that one more time. But you do think of some of these value names, again, if they're cash upfront companies, if they have revenues that are going to adjust up with inflation while maybe some of their costs are a little bit stickier, that's going to be beneficial to the income of those companies. So thinking along those lines, there's still quite a bit of play in that value trade. I think one of the biggest drivers of that as we look forward is going to be what happens with inflation and interest rates in 2022. But certainly when people had been sort of off value for a number of years, that's back in the consideration of people's portfolios. Something like our US value ETF, ZBU, certainly very strong returns in 2021 and in consideration for 2022. So lots to think about value, but I think it's starting with your expectations around inflation and interest rates.
Now, keeping with kind of those macro expectations, a lot of investors also thinking about sectors and using ETFs to rotate into a sector that might be benefiting from this environment. What are some of the sectors you'd highlight that kind of do maybe better than others in an inflationary environment or rising rate environment?
Well, right here at home in Canada, two of our largest sectors are two areas that we're going to talk about. So, very positive for the Canadian market, starting with financials and banks. People looked at our banks again out of that reopening trade. Banks really did incredibly well through 2021, and if you look at the steepening of the yield curve that's going on right now, that's actually beneficial to banks, considering their business model. And as long as the economy continues, to do well, there's a lot of life ahead in that trade. So a lot of interest in banks right now. And if we look back to sector flows in 2021, financials certainly led the way. I think the bigger surprise has been in energy. So if you look at our oil and gas ETF, ZEO, that was actually our highest returning ETF across the shelf in 2021, returning a remarkable 65%. And I think you'd have a hard time finding people that would have predicted anything along those lines. But you got a couple of things at play there. One, again, you're benefiting from that economic rebound and demand increasing. But on the other side, some real supply problems. And so you add that to the idea of increasing demand, and all of a sudden that's why you've really seen that jump ahead in prices. And a lot of those conditions are still in play for 2022. Certainly the front of that trade has gone through, but there's still more opportunity ahead, especially if you look at the disruptions that still are there on the supply side. For demand, are we coming out of lockdowns? Is travel going to pick back up? Is economic activity going to continue to go back to what it was pre-pandemic? Those are the big questions you've got to think about around energy. But certainly financials and energy, tied to the Canadian market overall, been big sector drivers ever since the reopening trade.
So Mark, you guys close out the report with a discussion on fixed income. Now, I know we started today's chat talking about how equity ETFs really dominated the flows over fixed income, but certainly fixed income ETFs or fixed income allocation is important for some investors or many investors. So what can you tell us about this asset class and maybe an outlook for it in 2022?
Sure. Well, fixed income is definitely challenged right now. We saw that in 2021. We saw that just in this last month of January 2022. And it's really those two factors, right? It's the rising rates, and of course that's being compounded by the inflation concerns on the long end of the curve. So I think how to deal with fixed income is probably the biggest challenge in investors' portfolios right now. Because you want it there to offset equity market risk, the basic premise of a balanced portfolio. but at the same time, when your outlook on fixed income is swinging to the negative, you're certainly thinking to underweight it, or at least many people are, as we see in the ETF flows as equities dominated 2021. Now, one thing we are seeing is people parking a little bit more in the aggregate market. So that would be like our BMO aggregate bond ETF, ZAG. You know, that's to create that ballast in your portfolio against equities without necessarily making a bunch of different bets within fixed income. Although one I'd mention that we don't have up here would be inflation protected bonds. So whether that's US or Canadian, I'm biased to US because of the shorter duration. You're certainly seeing interest pick up in inflation protected bonds because, of course, in that case, unlike a fixed coupon, you're actually adjusting for inflation over time.
Thanks, Mark. And maybe I'll just take a sec to define, what's an aggregate bond ETF. Maybe there's some investors out there that aren't familiar with that. What we're really talking about is you own basically with this ETF or an ETF like it, the entire bond market in Canada. So you have exposure to provincial bonds, federal bonds, and corporate bonds all within a single ticker. So that's what an aggregate bond ETF is. So Mark, you and your team were really, really busy this month or even beyond. I know it takes more than a month to list ETFs, but 10 new ETFs were listed just last week. We couldn't fit them all in this slide, but we wanted to highlight just a few for our viewers to put them on your radar. So we talked about responsible investing ETFs, and BMO listed the BMO MSCI ACWI Paris Aligned Climate Equity ETF ZGRN, so Z Green, love that ticker. So the companies that are in this ETF are actually all aligned with the Paris Climate Accord. They have carbon emission targets, and they're working towards things like the 1.5 degrees Celsius targets that we're hearing about in the news. So an interesting ETF if you'd like to check that out. We've also expanded our asset allocation ETF options. So by popular demand, we have an all equity ETF, ZEQT. So that holds all of the some of the largest Canadian equity ETFs within it. You get global exposure. And then a couple interesting new income options. So we have now ZMI.U. So our monthly income asset allocation ETF now is offered in US dollars for those investors who are thinking or that may need US dollar cash flow. And then we have for our balanced asset allocation ETF, we now offer ZBAL.T. So this is a T6 series. So what we're doing here is for income oriented investors, we have a fixed distribution of 6% per year. So if that's something you're interested in, BMOETFs.com, you can learn more about it. Okay, so I promised we would get to questions. We did save some time. Our first one here, what's with all the volatility in the market and why specifically tech companies? Mark?
Sure, I think we can give that one a quick answer. I think it's all tied to volatility and interest rates. We've really seen a lot of movement in the fixed income market the last couple of weeks in the past month, and that's just flowing through, as we talked about before, to any of these growth-oriented companies where they're very much valued on future cash flows. So within the technology sector, you're seeing a lot more interest in those developed companies such as, let's say, Microsoft right now is being a bit more defensive than some of the growthier names in the tech sector.
Thanks, Mark. Our next question, I think you kind of tackled this earlier in today's chat about ETFs, which could mitigate inflation, but the second part of this question, maybe I'll have you answer if you can. What about alternative strategies? Do these work in an inflationary environment?
There's lots of alternative strategies out there, but there are certainly some that you would consider as inflation buffers within your portfolio. I'm thinking about things that maybe have exposure to infrastructure or real assets or commodities, things where the prices are going to rise with inflation and therefore provide that buffer within that valuation. So lots going on there. That'd be my starting point. So if I was to think about an ETF, perhaps something like our ZGI, our global infrastructure ETF, would be something to think about from an infrastructure perspective. And then beyond that, you can start to look at some things that maybe include real estate or listed companies of the like. So certainly you're looking for things where prices are going to rise as inflation picks up.
Thanks, Mark. Does BMO offer a Canadian energy sector ETF? Yes, we do. That ticker is ZEO. And I will note, we do balance that. It's an equal weighted ETF. So just avoiding the concentration risk, because in Canada, the top, I think 1 or 2 energy companies actually by market cap take up most of the sector. So we decided to equal weight that. That ZEO, and Mark talked about it earlier today, had very strong performance last year, driven by strength in the energy sector. Mark, what sectors do the current supply chain issues most heavily impact?
Well, that's a tough one, Danielle, because I would turn around and say almost every sector is impacted one way or another by supply chain issues. I think energy would be the first one I think of from a positive perspective, where really a lot of that price appreciation is in consideration of what's going on supply chain. The flip side to that are all the companies that are having difficulties stocking shelves and things of that nature. You're even hearing now grocery stores being challenged to keep the shelves full. So it depends on the idea of really whether you're supplying or you're receiving. And the more that you're supplying something like energy, the more beneficial that might potentially be if that persists.
Thanks, Mark. Our last question coming in from an audience member. According to a financial analyst, ZEB, the BMO Equal Weight Banks ETF, was preferred over ZWB, which is the Cover Call Banks ETF. Why would that be? I don't know what this financial analyst is looking at, but maybe I can just briefly state the differences. If you are someone, perhaps this analyst is bullish on the banking sector, something like ZEB would be, I guess, preferred for this individual because they want to be exposed to all the growth the sector can offer. If you turn to something like a cover call ETF, investors who seek this exposure out tend to be more interested in a little extra cash flow, that enhanced yield that a cover call ETF provides. But what the cover call ETF does to enhance that yield, they sell call options on, in our case for ZWB, on half the portfolio, which means you're capping that upside potential to get that excess cash flow. So I guess someone who would be more bullish on the sector would prefer just the more growth focused ticker in ZEB. So thanks for the question. Well, thanks everybody for tuning in. It was great to have you with us. If you would like to read that report, we have it on our website at etfmarketinsights.com. Next week, we have a great panel of experts. We're going to dive into registered plans, TFSAs, RESPs, RRSPs. What are they? How do you best use them? So you don't want to miss that. And we'll see you next Friday.
Thank you for watching the Market Insights webinar series. To stream any previous episode of the Market Insights webinar series, please visit www.youtube.com/ETF Market Insights. Remember to hit subscribe so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at www.etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.